Oh, here it comes. Oh, you see that? The market's dumping. Luna was taking off last week, and now Luna's dumping. This makes for good content, right? All right, folks. Well, yesterday I was out riding bikes with an old friend who I haven't seen in a while, and he asked me what I've been doing lately. And when I told him, well, I wait until my family's not home. I go out in my garage, turn on my webcam, and Wyckoff in front of thousands of strangers. He was speechless. And then when I told him I was only teasing, I'm making crypto YouTube videos, that's when he got concerned, put his hand on my shoulder and said, you need to rethink some things in your life. But here I am again. Let's head back to the garage. I'll dim the lights, take my charts out. Let's do this. All right, folks, here we are. And I do apologize for those tasteless jokes, but they're low-hanging fruit. I mean, Wyckoff jokes, come on, give me something. Maybe you just didn't get my joke. So let me use this as a clever segue to talk a little bit about Richard Wyckoff. This channel went from a channel with tutorials on how to make foam lightsabers for kids to a overnight crypto channel on the back of Richard Wyckoff. So you can't blame me for making some Wyckoff jokes. Who is Richard Wyckoff? Why does it matter? Well, really quickly, if this is your first time, or even if you've been around the block and you understand Wyckoff, it bears repeating that this is a man who lived in the early 20th century from 1873 to 1934. He was one of the pioneers of technical analysis and one of the heavy hitters in the early days of the stock market. And he saw behind the scenes how smart money on Wall Street back in the 20s and 30s was or were routinely running these campaigns designed to fleece the public. That is how smart money makes money, is that they are able to, with a combination of price manipulation, but that's not even the big part of it, but also controlling the narrative and having different voices in the space talk positively or negatively about a particular stock. They're able to drive the emotional narrative that allows them to run through a campaign. So this is just one of the pages on the Crypto Garden portal that we've set up that has a lot more deep diving into Wyckoff. I update my Wyckoff chart here. I've got some other things that I've drawn that are just helpful resources. But ultimately, I think Wyckoff is about understanding how our emotions play into the trading game. So let's just really quickly, before we look at the market and see how much this is playing out today, let's look at Richard Wyckoff's lessons from back in the early 20th century and talk about why these campaigns are run by smart money to dupe you and I out of our paychecks, falling into stocks that they own and then distribute and then reaccumulate. So with a Wyckoff mindset, there's really two phases, and it's very interesting how they are mirror images of each other. So here's this little drawing that I did where you can see this is a distribution phase and this is an accumulation phase. And these are mirror images. It's actually really mind-boggling to think about how the psychology of selling something at a high price and keeping that audience always thinking the price is going higher, is the same thing as buying that same asset back from that group while making them always think the price is going lower, So these two phases, like a yin and a yang, compose this very crafty scheme whereby smart money is able to accumulate, collect, actually hold a large stake of that asset. And once they have accumulated enough, it gives them a cause to mark up the price. And how does price get marked up? Well, it gets marked up through the narrative. It's really positive news. It's now voices in the space talking about how this is going to 2x, 3x in the next few months. And it gets everybody in this bull run kind of fever. I've heard it said, and I like, that there aren't bull markets and bear markets. There's only mark up and mark down. And from the perspective of smart money, that's true. So if you look at these distribution events, we're going to look at the real one that's happening right now as we speak, but let's just talk a little bit about the psychology that goes into them. So the first phase is accumulation. And this is where over a period of sometimes weeks, sometimes hours, sometimes months, and sometimes years, the smart money are building positions where they hold a large quantity. and they are keeping the price low and in a range where it's kind of continuing. You can see how this price moves between these lines. They're keeping it controlled and locked into this price range so that they can buy. They're buying. They're getting people to sell, because we're always kind of scaring everybody that the price is going to drop lower, and then, oh, it's dropping lower, and oh, it's dropping lower. And they're able to buy and create a cause. Once they have that cause, the next phase is a distribution, which is exactly what it sounds like. They're distributing that asset at the highest price they can get it, locked into a range, over a period of time, because if they sold everything all at once, it would drive the price down. So a distribution allows them to, in the case of crypto, there was a 3-month distribution that happened earlier this year, where for 3 months they were able to sell between 45, actually it was higher than that. We can look at it in a second, but between $45,000 and $60,000 over 3 months, they can sell all those assets and then scare everybody, turn that narrative around, make everybody sell this stuff like it's toxic, and the market crashes back down into another accumulation. So the psychology at play is what's really interesting to me. And when you are on an upswing, a markup, it's all the greed. And if you go on YouTube and you see the people talking there, it's about easy Ethereum millions, and it's about how 0.02 Bitcoin is going to make you a billionaire in the year 2023 or whatever it is. So that narrative is what gets someone to buy something at $60,000 because they believe it's going to 100,000, 200, 300,000. So it's a greed-fueled space. And we even have, I talk about this on this channel all the time, the fear and greed index, where right now, interestingly, actually, let me refresh this. This is from yesterday. I haven't refreshed it. We're in fear. Look at that. From yesterday, when I had this page open, it was at neutral, and now we're in fear. And we're about to see why, because it's part of this overall pattern. But we're in a fear mode. I can look at my chart here. Let's look at 1 year of the fear and greed index. And lo and behold, this looks an awful lot like these distribution patterns. When it's in accumulation, it's in fear. The market is fearful because it always seems like the price is going lower. And when it's in a distribution phase, as it just was, and as it was over a long period of time in the beginning of 2021, it's in greed. So the first thing that I really talk about on this channel is about keeping those emotions in check. Because if you are finding yourself panic selling or buying in because you think that this asset that you're about to buy, it doesn't matter if it's Bitcoin or an altcoin, if you think it's going to 100x overnight and the market is in greed, there's a good chance that it's a distribution phase and the smart money has already made their positions, they're already selling, and it's only a matter of time before the price corrects back down. So take a good look at this chart, and now let's look at Bitcoin. And let's take a look at what we've done this year. So again, this channel really got its founding as a crypto channel, which I still have some heartburn about, which we'll talk about at the end of this video. But I posted a video, and I wasn't the first one to talk about this. I had heard it on another crypto YouTuber's channel. That person then actually retracted the statement and then went back to the bull narrative, which is part of the reason why I was so aggro about the voices in this space being the leading contributors of the fear and greed cycle. But regardless, I posted a video. I talked about the distribution that was happening between basically, well, really, we started back in December all the way through the big crash that happened in May. And so this pattern here is an exact, almost textbook Wyckoff distribution. All the same stages. Here's the buying climax, the automatic reaction, our show of weakness, our UTAD. This is a test. I'm sure a lot of you remember when we very briefly hit $64,000 before crashing back down. This is a Wyckoff distribution. This was a perfectly executed campaign that took Bitcoin, which had been hanging out at $3,000 to $10,000 for a year. Here's all the way back in March. Oh no, this is September of 2020. But for everyone, the smart money that was accumulating here, to take an asset from $10,000 all the way up into a range of $40,000 to $60,000 and then to distribute that, I mean, that is well done. Bravo. That is an accomplishment. A lot of money was made, and this is just what Wall Street and institutions do in any place that you can make money in a market. And they did it in crypto, and they're still doing it. So while we had this distribution, we had this big crash off in May, and everyone was wondering, are we going down? Are we going to see an accumulation? What are we going to see? And lo and behold, we had another very, very characteristic accumulation that brought us to the end of July. And then we saw another markup phase, and we saw the price climb. And I was tracking this, and it wasn't until very recently, like within the last couple of days, that the pattern, of course, emerges and you see exactly what's going on. And again, I credit Ben Cowan for reaching out with this very simple image, which just very nicely illustrates the similarities. Really, I'm calling it a fractal. It's a smaller version of the exact same course of price action, where this is back in December. We had this initial big markup, the first big correction, all the way up to this buying climax. And if you look here, the spring that happened in July brought us up to this first pullback, up to this little buying climax, 1, 2, 3, 4, 5. And when I posted my video the other night with this same diagram, there was a question mark. We didn't know yet. We were still hanging out on this ledge if price indeed was going to capitulate and come back down to the level of this first pullback as it had done previously. Back here in January, we came down to 29,000. This first pullback here, you can see on number 1, came down to about 29,000. That's the same place that after the distribution and the accumulation, we found our bounce to kind of spring us back out of that range. And so if we followed that same pattern again, it would have us coming back down to around, depending on how you want to look at it. If you look at just a horizontal line, it appears to be at around $37,000. I was also kind of repeating the fractal with chart lines and kind of stretching it to fit, and it was showing more like $34,000. So whatever that target ends up being, the question was, are we going to repeat this fractal move for move, come back down? And at this point, it's sure looking that way. That's not to say we couldn't get another bounce and go rocketing out of this zone. But the thing that I've been talking about for a couple weeks, and that I think should be appreciated, is that when you are accumulating and building a cause to mark up price, it does matter how long that accumulation zone ran for. And there is a lot more consistency in the goals of the smart money who are accumulating over a period of, let's just take this from the COVID March crash, where we actually saw a $3,000 Bitcoin. Man, if I could have access to a time machine and send a note back to my former self and say, yo, don't worry about stockpiling rice, Bitcoin, that's where it's at. But basically we had an accumulation range that went for 200 days or more from that initial COVID crash. And if we look at the bear market, this goes back even farther. So this is actually a period of years to build this position. And that gives a lot of, I think of it like a spring, like loading that spring. It gives us a lot of cause for the price to get marked up by, in this case, just going from, we'll just take kind of arbitrarily here this last little bounce before we really rocketed up to 64,000, a 500% price increase. Okay, so we did that. We had a distribution that lasted for, if we kind of take it from this first sell-off to the capitulation about here, about 120 days. So what does it then mean to accumulate for, how long was this? I think it was about 60 days before that spring. Yeah, about 65 days. So there in my thinking, and take this all with a grain of salt, because I'm not a mathematician. I am not a financial analyst. I'm not a financial advisor. I'm just a dude on YouTube who likes looking at charts and sharing them with you on the interwebs. In my thinking, and from what I know about Wyckoff, this type of an accumulation does not have the same level of loading that spring as this much longer accumulation window did that took us up 500%. So that's not to say that we couldn't get another bounce here and that we couldn't go up a bit higher. But in my understanding of how these markets work, it's spending time at those lower levels. You know, some people call it consolidation, some people call it accumulation, or whatever the word is that describes this kind of low prices moving in a range when the market is fearful. The longer that happens, the more a cause is built to take prices higher. And so there are other ways to go higher. We've seen in other bull markets or other markup phases that to kind of come up and be regularly testing some of those key moving averages and always coming back and kind of finding that buying support can buoy the price back up. But the question is, are we seeing that now? Is this really the spring that's going to take us to $100,000? Or did we really kind of get the payout? You know, the smart money got its payout in this phase. And this is just, you know, what they're able to do with these same kind of patterns on a smaller scale. I don't know. I still have a question mark here. But, you know, when I did this video the other night and I posted it to the Crypto Garden about 10 hours earlier than I posted it to the rest of YouTube, we were hanging out, you know, on this little ledge with this question mark of, are we going to drop off? And now we have seen, since the time of that posting on, you know, yesterday and today, at least by the wicks, a 15% drop, by the current price, about a 10% drop. And so what? Who cares? Well, let's talk about the next little thing I have here on my flow. We had the Wyckoff primer. We've talked about this pullback. Let's move this guy up here. So here's the question that I keep hearing, and I'm not going to pretend to have an answer, and I'm not going to tell you what I've done because I don't want to be in a position of anyone copying me, because I don't know that I'm doing the right things most of the time, to be honest. I'm learning a lot in this market. I appreciate the perspectives of people around me, and I love, someone said recently that they had seen an article where the best performing stock portfolios are the ones where people either forget about it or die. That those tend to perform better than any other kind of trading or trying to time the tops and the bottoms. And I believe that there is some real truth to that, to just kind of dollar cost average into the blue chip stocks or the blue chip cryptos and just not pay attention, I think is the true spirit of hodling. And if you're doing that kind of hodling, you're probably not listening to people like me giving a daily analysis, because you're not paying attention. You're out living your life. And that's kind of where I aspire to be. So this question of sell versus hodl. Well, I just want to think through some of what I have experienced here and kind of make the case for either. If you see something like this from someone on YouTube, let's say you trust me and you remember what happened last time, and okay, are we going to go back down? Are we going to go back down to $37,000? The impulse can be, all right, well, if that's where it's going, I'm going to sell now, and then I can buy back at 37,000. And wow, I just made, you know, so to speak, 15, 20% on that move down. If I buy back in the same amount of that crypto at that lower price, it's the same as if it had gone up by 20%. The challenge, however, and I've experienced this because I've tried in the past to time these tops and bottoms, is again the psychology. So when we are up in these ranges, let me grab my brush here. When we're up in these ranges, it's pretty darn easy to buy because the narrative is bullish. Everyone on YouTube is diamond eyes and laser hands, and it's pretty easy actually to buy at the worst time. It's a lot harder to buy at the best time. And so if you sell expecting to buy back lower, you just have to remember that the psychology changes fundamentally from the time when you're considering selling to where that good re-entry point is. Because when you're in those zones, these accumulation ranges, the narrative changes. Because again, the goal for the smart money is to keep people fearful that it's going to go lower. It's going to go lower. You're trying to time that bottom, but it's always about to go lower. And so when you're faced with those really good buying opportunities, your gut is probably telling you this is not right. It's going to go lower. It's going to go to 19. People on YouTube are saying it's going to 10. You know, the China FUD and this and that, everything is going to tell you that it's not the right time to buy back in. And so what happens, and this has happened to me on large and small scales, where you sell and then try and retime. is you're waiting. Oh no, I think it's going lower. Let's say you sell here. Let's say you're watching this video, you sell right now, you're convinced, you sell at 43, let's just say. And then you're watching, you know, for the next couple of weeks, and maybe you're kind of losing interest, but the market's fearful. And man, we have this like spring that looks like the whole thing is going to crash. We're going to 20. We're going to $20,000. And then in a matter of a couple days, just like over here, look at how fast these prices move up. Before you know it, you've shot past 43 and you're back at 45, 47, 48. And if you were trying to time this perfect bottom, you might find yourself where suddenly you've missed out. Because you know, was it worth it to sell and pay the Coinbase fees or whatever and do the tax exchange that you're going to have to pay taxes on to potentially time this move back up? I don't know. I'm just saying I've been in this position where, and I'll tell you a story. This is a great story. So right here, I remember this so well. I was doing a lot of my buying earlier this year right in this range. I bought in heavily when Tesla was buying in, and I thought to myself, the price is never going lower. If Tesla's buying in, the price is never going lower. Bitcoin is going to be worth 200,000 by the end of the year. And so when I got here, I actually bought in right at the buying climax. I mean, it was the buying climax. Everyone was buying in. It was the most bullish outlook that the market had had in 4 years. And so I remember I actually was in my bed under the covers, so I didn't wake my wife up, watching YouTube videos and just being so convinced that price was going to 220, and that I was doing these calculations of if I take money out of our home equity line of credit and I put it in and it's at 40 whatever, well at this time it was like 55. And if I pull it out now at 50 and then it goes to 200, well, I've basically, I was doing these calculations just with greed, diamonds in my eyes. And so I did that in the morning. I put in, I think it was like $10,000. It wasn't a small amount for me. And then I went on a hike that next day. And as I was hiking up this trail with Luna, price was rising. I was checking it as I was hiking, and just, things were going up. I was so smart. I was so happy. And I was just whistling to myself. And I got to the top of the mountain and I just had this moment of quiet reflection. And then I started hiking back down and the price started falling. And the price was falling and falling and falling. And I was like, what the hell just happened? Like, what's going on? And I went back on YouTube, and now everyone's fearful. They're talking about the fear and greed index, and it's in fear. And that as soon as I saw the fear, it scared me. And I went and I sold. I had put in 10 in the morning. And I sold. I think I lost, maybe $1,000 or $2,000, but I wanted to just, I thought it was gonna crash. That was it. This was the top. And so I sold, thinking, I could, maybe buy back in. And price continued to fall. And by the time it got back out of this range, a little bit longer, I think I was buying again at those prices above where I had sold. So I did the wrong thing at the wrong time, multiple times, and that really was when I started to wake up. If this is supposed to go to 200,000 and everyone's talking about how rare and valuable it is, why is this feeling like this just grueling, draining, like it just exhausted everybody's interest. It exhausted our diamond eyes. And then of course the scare, and everyone's selling and selling, and this was the big crash that we all kind of lived through in May. So anyway, that's kind of my shtick about do you sell and try and buy back lower? I don't know. It can be a hard thing to time emotionally and psychologically. The odds are against you because that's what it's trying to get you to do. It's trying to get you to sell. This whole area is trying to get you to sell because they want it back. It's like a video game where your character dies and all its loot goes flying out and they collect it all to go sell it again. So I'm just being real that, I did sell all my Bitcoin when I did my first Wyckoff video. I sold it all. I actually converted it to Ethereum, which then went on and did some cool things. So I felt really good because I was a little bit ahead of the curve, selling out of my Bitcoin, using that to do some other things. But I still, to this day, I miss the Bitcoin that I had. I was sitting on a nice little pile. I had been trading. I'd been learning the ropes, and I was pretty proud of what I had. And now with all the funny business and all the, trying to be smart, I have a lot less Bitcoin. And even if this goes back down, like I always talk about on this channel, I do believe in the long-term narrative of Bitcoin. And maybe I'm wrong there. I don't know. But, when I look at the things in this market that I actually believe in, one of them is that Bitcoin has always bailed people out. Bitcoin, it has been going up, and it might be diminishing returns in a logarithmic type scale. But my expectation is that even if we crash back down to 30 or 20 or whatever, it's gonna repeat the pattern, because the same psychology here that allowed the smart money to take something from $10,000 to $60,000 is the same psychology that allowed them to take it from $30,000 back up to $50,000, is the same psychology that will eventually allow them to take it from 30 up to 100. Like I believe that the value is here, that this is a game that's going to continue to be played. And I believe in the notion that even if you bought at the worst possible time in 2017, 2018, if you had just held on to it, you would still be up. So that's kind of the HODL case, and the notion that to just dollar cost average in, and if you believe in it, if it's a real project, if it's, something that is going to be around for the long term. I'm not talking about the shit coins and all the, alts that have their own kind of ecosystem and life cycle. But if you're kind of buying into the top 5 cryptos, the blue chip crypto stocks, and just, dollar cost average in and step away and stop paying attention, I think that might be one of the best approaches. This is not financial advice. I've told you many times, I'm not a financial advisor. I'm just Ryan. That's what it says on my driver's license. So take it all with a grain of salt. Okay, this is going long, but if I have your attention, I'm going to just go into this last little topic. YouTube. So here's the deal. You're watching this probably because you're scared, because the market is in a cycle where, like last time when this channel got all the views, all the visitors, I went from maybe a few tens of dozens of subscriptions to over 100,000 a week. It was all in this time period. It was all right here, because the market is fearful and people want to know why. Why is the market crashing? And these types of explanations and understanding the psychology and the Wyckoff is what people want to hear right now. It's what you want to hear. You don't want to hear me talk when things are looking bullish. And I've seen, a drop off in interest and views on the videos that I've been posting in this time period. And it's not until now, really, when things are kind of crashing again, that we're having a repeat of this cycle. And I've learned a lot in the YouTube space in a short amount of time. And one of the things that I was very angry about early on was how YouTubers were, to me, a big part of the problem. Because the person who's using their megaphone to tell people that these cryptos are going to $200,000 is what gets that college student to empty their college savings fund, put it into Bitcoin, and then get scared into selling it, and someone is now hurt. Like, that is a real life situation, and this whole, string of purple candles is a lot of really sad stories. I bet there's divorces in here. I bet there's businesses lost. I bet there's people that couldn't go to school anymore. Like, there's a lot of human suffering that happens, and for a YouTuber to come on and have no responsibility for the messages that they're sending and creating these clickbait thumbnails and the 10 exclamation points, to me, it was just disgusting. And it was something that I, really, one of the reasons why I was interested in starting this channel was to kind of speak out against it and say, hey, we have a responsibility as people that are listened to in this space to say good stuff and to temper this kind of wild exaggeration to the upside or the downside, because it's the same thing. The Wyckoff patterns, it's the yin and the yang, it's the same psychology that goes up, goes down. So I had a lot of kind of irritation and frustration towards the other YouTubers. But now that I'm in the YouTube space a little bit more, and I'm posting videos and I'm posting things that I'm actually a little bit more interested in, and I'm seeing how those just don't get viewed, they don't get pushed by the algorithms. You always hear people in other channels, click the like button, smash this, blah, blah, blah. It's, help the algorithm. And that's because the truth is YouTube is a beast, and it needs to be fed, because the content creators on YouTube, they don't really work for themselves. They work for YouTube. YouTube's interests are eyeballs, attention, time watch so that they can sell ads, so that they can drive their bottom line, so they can have revenue. And so the algorithms are geared such that a content creator like myself has to move towards clickbait, has to move towards sensationalism, because you as the audience, that's what you click on. And that's what the algorithm is driven by. And I'm a lot more forgiving now to the content creators because I see the slippery slope. And I see how when you feed the beast, the beast feeds you. And I think it's kind of, I don't know, I have some very strong feelings about it. And this might not be a good decision for me long term, but I've decided not to feed the beast. I don't have ads on these videos. I am not telling you to subscribe and smash up the algorithm, whatever. I'm just going to continue to put out the content that I think is the most relevant. And sometimes that's a yoga video, because honestly, when things are going sideways and it's kind of boring, maybe you should step away from your computer. Maybe you should have a conversation about something other than crypto. But my point is that, just having the keyword packed, playing into the fear or greed titles and descriptions and videos is something that I'm not going to do. And so what does that mean? Well, for me, it means that my interest here has gone into the crypto garden. I've said that on this channel a bunch. And that is a group of people that are all very passionate. We have our hearts in the right place, believe me, because I'm on the phone with them every day. They're dealing with me and my, diva-ness of like unwavering. We are not selling out. We are not going to be like all of the other things in this space that I'm talking about. So the way that I am hopeful that I can continue to create this type of content, if you enjoy it, is that the Crypto Garden is $10 a month. That gets you in, this video is being watched by all the Crypto Garden community hours and sometimes days ahead of the YouTube audience. It has the portal where we have, information that's being updated about Wyckoff. This is where all of the videos go from our, classrooms that we have, the behind the scenes kind of calls, and just the ongoing content that we're creating. And it's a international community, and I'm really proud of the people that are there. I love the conversations and the I don't know if I should be showing other people's faces, and it's a Discord community. So this is where we are chatting, we're sharing when the live streams are being held or the different class events, asking questions, conversing on all kinds of topics. We've got areas for technical analysis, different topics in the space. And then what I'm probably the most proud of, these are people sharing their actual lives, their actual gardens, the things that motivate us. And I've been having just as many conversations lately about psychedelics, mountain bikes, gardening, as I have crypto. This is my sales pitch, I guess, is that I am not going to come on YouTube and tell you to smash up the algorithm. If you like me and you like the content and you want to be part of a crypto community that actually cares, then I do encourage you to check out thecryptogarden.io. And for $10 a month, you can join the community, you can join the live streams, you can join the schedule that we're continuing to put out. And so that's my appeal. I haven't made any money at this yet. I haven't been paid a cent for my work on YouTube or the Crypto Garden. We've been paying our moderators and teachers and people in the garden first and foremost. We really want to build something that lasts over time, and a place that you can come into and not have to go brave the wilds of YouTube to find the content that you're looking for. Because I promise you, once this cycle is back to the greed cycle, you're not going to see my videos, because I'm not going to be doing the clickbait. I'm not going to be doing the thumbnails. I'm not. So anyway, that's my long-winded appeal. And it's hard for me to do because I am not a salesperson. I am not trying to get you to, buy something that I don't think has value. So I'll stop beating that drum, but that's my pitch to you is we're building something special. And if you like this type of content and you don't like YouTube, which I don't, I'm grateful to it because how else could a peon like me get an audience, overnight? But I think it's fueling some of the worst of human emotion. And I think there's better ways that we can communicate the same information in a safe container where we can all grow and support each other and focus on the positive things, not just what the algorithm wants. So I'm going to leave it there. That was a long video, but I appreciate you tuning in. And until next time, as always, cheers.